Good morning, Jags. This is Fahad. Uh, today is Tuesday. Got my days mixed up. September 8th. Let's get started. So, Nasdaq is the one to blame for this vicious market correction that's in our hand right now. But there are certain important levels that now we need to watch. First of all, I hope that everybody saw the warning signals that we had been pointing out for several days now. Just as a quick reminder for those who missed, we did send out on August 26th, only less than 2 weeks ago, this email called Market Breadth, in which I discussed in extensive details the market internals were showing red flash hot scenario where basically any day we were going to see some vicious pullback. This was all discussed on August 26th. And then the day the market started to sell off, which was the Thursday of last week, that morning we put out this video on Jaguar Media under the conversations where I spent 10 minutes in the morning talking about that Nasdaq sentiment has gone to an extreme level, very stretched, and basically this is simply unsustainable, and we're going to see some pullbacks, and everybody needed to cool off and just wait. And so I hope the messages that we have been, and aside from that, in the chat room and webinars, we also discussed this multiple times. But it's important to note, it's important to realize the speed of this. And to some, this may come as actually a surprise, but frankly, for those who think that this is a surprise, how come when the market was melting up, did not come to you as a surprise? How was that any reasonable? To put it bluntly, from Thursday morning to Friday mid-morning, we're not even talking about 1.5 day. From Thursday morning to Friday mid-morning, Nasdaq was down 10%. And then we started to stabilize on Friday afternoon. We started to see some bounces off the lows. Apple went as low as $110 per share and then bounced all the way back to 121. We saw quite a few of hammer reversal candle formations. Many stocks went from, Tesla included, for example, many went from red to green on Friday afternoon. But then this morning, they came in and they started to sell this again. And this is exactly what I discussed in chat room with a lot of the clients on Friday morning, as some of you may remember discussion. I mentioned repeatedly that this thing is not over yet. The sell-off is not over yet. There's a lot of froth that needs to come out. There's a lot of weak hands, Robin Hooders, or even institutional traders that have piled into call spreads, and then the SoftBank news comes out, okay? And valuations are stretched, and more importantly, the momentum was so strong that Nasdaq was trading 31% above its 200-day moving averages. When you get the momentum breaks, these things snap back, and they snap back very fast, okay? So one has to be mindful of the downside and how vicious and how fast it could be, just like you have to be mindful of how vicious the run was to the upside with absolute no sense behind it. Every single day, Nasdaq was up 100, 200 points every single day. And I started to joke around that any day you can wake up and buy Apple call options in the morning and flip them by the afternoon and make tons and tons of money. And that was the market that we had. Now that momentum has broken. So where do we go from here? With the volume that we saw on Thursday and Friday last week, Friday volume in Nasdaq was the highest we have seen since early March. That's when things were really falling during COVID time. All right, and the first retest that everybody is going to be looking at today, all technical, so I might as well just bring it up, is the 50-day moving average, which is this blue line right on your screen. We are resting just above that, right over here. Now, is it going to be really as simple as that? Oh, we came down to 50-day. Now, remember, Nasdaq was trading 12% above the 50-day moving average, and I talked about how stretched that was. It was going to get retested really quick. You can see how these moving averages were so distance off and how quickly they're coming. I don't think the 50-day moving average will hold either. You have to look at the volume, and you have to put this entire picture together with the market internals and how much more they still have to run. I don't think the 50-day moving average, which is pretty much right at 11,000 line in Nasdaq, is going to hold either. I think we're going to break that. And once we break that, the bigger, thicker, most important VOP congestion levels don't come into play until actually about 10,500, which would be a total of about 16% decline in Nasdaq from the highs. From there, I could see some buying start to come in. Now, this could either happen today or by middle of the week. Maybe we get a turnaround Tuesday tomorrow, or maybe we get a turnaround Wednesday. By the middle of the week, we start to see some buying start to come in. Also, pay attention to the leaders. So what were the leaders that went up? Naturally, Apple was one of them. Tesla was the other one, right? These leaders are still making lower lows. In fact, the entire space, big cap tech stocks were the leaders. Amazon in pre-market is already trading below its Friday low. Google is in pre-market is already trading below its Friday low. Tesla is already trading below its Friday low, even though Nasdaq has not taken out its Friday low yet. Nasdaq future, that is. So it's telling you that the leaders are still making lower lows, relatively speaking. So that means the pressure is still on. You want to watch this price action. You want to weigh each of these big mega cap tech stocks against the index to see if we're starting to see relative. You can draw the ratio charts as I've shown before, and you can see that on a relative basis whether the mega cap tech stocks are starting to actually not respond to the sell-off anymore, where they're basically losing momentum, the downside momentum. That may start to happen around 10,500 after we take out the 50-day in Nasdaq some point. Let's see if that happens by the middle of the week. But I have to say that in an extreme case, if this case, because we're talking break in momentum and a very strong, very powerful break in momentum after a very, very long time, we could on an extreme case all the way down to 9,500 to about 10,000 range, which would equate to about 20 to 25% total sell-off in Nasdaq. That would not be pretty. A lot of stocks will take off, will basically get crushed during this period, and depends on how quickly that happens. There's a lot of resemblance between what you're seeing here in Nasdaq relative to the S&P 500 versus what we saw with the parabolic rise in 1990s and 2000, which was a dot-com bubble. Purely technically speaking, I'm not doing comparisons of valuations or the companies, what they were doing at that time versus now. These are very, very large enterprises, very different companies. That's why I do not think it's going to be anything like Nasdaq dot-com bubble, but it will be very, very sharp correction, and it's already currently underway. Here's a chart that basically resembles, that shows you the picture. Here's another one. This is the cyclically adjusted PE ratios, right? CAPE or CAPE ratio that many people talk about. This is for the entire S&P 500 index. Okay, the last time the S&P 500 index or CAPE ratio traded above 28 level, which is always the upper band, right? You have to go all the way back to the 1990s bubble. So if the market that you are comparing yourself to with the markets is basically what was a once in a generation massive equity bubble, to then justify that we still have room to run, I don't know if this is any sort of sustainable pattern, discernible pattern. But if you say that, comparing anything to what was previously naturally bubble times, is on the CAPE ratio side is just absolutely wrong. Let's look at some more normalized pattern. Well, that will tell you we're right at the upper end of this channel, right? 28 CAPE ratio in S&P 500. Keep these pictures in mind where we are. And a significant amount of optimism has been built that basically we're going to continue to see pouring into these tech sectors led by the retail crowd as well as SoftBank and whatnot. So I don't think this thing is over yet. I think this thing still has more to go, and expect a break below the 50-day and look for a move down to 10,500. Last thing I will show you is, we talked a lot about the market internals all the time. It's worth paying attention to these. Here's the CBOE equity put over call ratio in front of you. This is the 10-day moving average. This is still long way to go before we start to basically show any kind of heightened concerns around the market. And if you look at the NYSE move, NYSE is still firmly coming down. NYME remains firmly negative. We haven't seen the bull cross in NYSE yet. These are the charts that I've discussed many times before. If you look at the total amount of advance over declining issues, you will see the similar picture. The advance over declining issues, the 10-day moving average has to come down quite a bit. There's still tremendous amount of fraud. Or if you look at the NAAIM exposure index, or you look at the CNN fear and greed index, all of them still have plenty of room to correct before we start to see some sensible bottoming formation come into play. And that's all I'm going to say, high level view, repeating and adding more color than last time. Jay?
Morning, Fahad. So, with the market where it was at the end of last week, heading into the long weekend, when creating weekend research for clients, my mindset was to find some maybe longer term ideas, names to put on your watch list, names that have upcoming events to watch out for, upcoming catalysts, but they may take a little bit of time to pan out. One of those companies that I featured was Inovalon Holdings. Ticker is INOV. This is a healthcare IT company. It provides cloud-based data analytics. Specifically, it offers the Inovalon One platform, which a proprietary platform with massive amounts of data that has been collected from pharmaceutical companies, healthcare plans, diagnostic companies. And ultimately, it's a real-time decision support platform. It gives patients, basically it allows, the patient to find out, if they are at increased risk for disease, or if a disease is spreading. The Inovalon platform is going to help you, the patient, as an example, make real-time decisions. And one of the items I talked about was, first of all, with this platform, how really since 2016, the company has been building it up. And it seems like now everything is starting to bear fruit with the sort of the add-on opportunities it has, as well as contracts it has been signing. And that's one of the items that I featured was back in June, it signed a contract with Cardinal Health. In July, it signed a contract with Walmart. And there was a note from KeyBank last week that discussed these contracts and ultimately how, according to management, the ACV metric that the company has includes only minimal contribution from all of these recent deals, including Walmart. And then I go on to talk about a couple other, as I said, additional add-on platform opportunities. But yeah, I mean, like I said, weekend research this time around was looking more longer term with names that do have catalysts, but it may take a little bit of time to pan out.
Yeah, very good stuff over here. And I would like to add my quick thoughts on high-level thoughts on the entire sector, rather than adding more color to fantastic bull case that you have already presented on this company INOV. And this is exactly the kind of mindset that one needs to have, right? So basically what's going to happen is that you're going to find yourself with some really, really good high growth niche category leaders that are going to pull back as everything get thrown out all at the same time in this market as correlations tighten. All right, when correlations tighten, all asset classes move together, and so this is going to be one of those companies that is going to do just fine over long term, but it's going to find itself pulling in 20-25% from its 52-week high, giving a fantastic opportunity to take a position. And I think we're going to get that beautiful entry hopefully in the next couple of days. High level view that I simply want to add is this, that my overview over the long weekend was that which is one sector. I'm giving you a clue over here as to what kind of trade ideas you would expect from me going forward from here. Once we start to see this technical momentum, this breakdown is start to subside. What is one sector that I believe is going to run going into year end, and it's going to have some very strong outperformance? And it's not going to be your Apple and Amazon and others. It's medtech in my view. So the names that I'm watching, where I'm so excited to buy some of these names on pullback, are names like Tandem Diabetes. Tandem Diabetes bounced off the 50-day moving average. Let it come in, see if it comes down to 91 or 92. That's going to be a great entry. Medtronics recently started to break out through $103 per share. Now it's pulling back, which was resistance is now becoming support. That's one entry. Stryker started to break out from the wedge, slightly pulling back. I think this thing is going to provide an entry around 195. VSX the same way, started to break out after a long time. If it comes down to 38, 39, it's going to provide great entry. There's a lot of really high quality names in medtech space that I'm most excited about, that I think they will run into year end. And that's where I'm looking for opportunities rather than constantly looking at Apple, Tesla, and such. But great stuff, Jay. Very good note on that one. Chronicle.
Morning, Fahad. No new setups this morning. In one of our early morning videos a couple weeks ago, I suggested to short Apple. I'm still short Apple, and my strategy is to stay short until the VIX returns to mid-20s. First time I've ever done this, so it's a bit of beginner's luck, I guess. But for this morning, I have a preview of the next Chinese Tech Demystified episode, and it's going to be about Bilibili, symbol BILI. This company often gets compared to YouTube. We're going to be covering why such a comparison is both right and wrong at the same time. Between the video and the research note, we're going to be breaking down Bilibili's history, and how it went from being a company that originally didn't care all that much about growth and maximizing revenue to one that is now embracing constant expansion and growth. Also, how Bilibili received backing from Alibaba and Tencent, how mobile gaming became an important part of their business, as well as providing an analysis of the most recent earnings and our final verdict on where the stock is headed. So the video is going to be out sometime this week.
Good stuff. Yeah, let's work on this if we can find time today or tomorrow, and let's send that video out. Looking forward to the next presentation. This will be the episode 5 of Chinese Tech Demystified. And folks, once again, this is the Jaguar Media website. This is free. There's every day there are videos posted over there all the time with lots of great content. You can see that the last series in which the Chinese Tech Demystified series that we had was in which we covered data nexus, symbol DADA. All these morning conversations are also recorded over here. Tons and tons of stuff on a daily basis. So feel free to check it out at any given time. All right. Now with that said, Avo.
All right, no specific stock. I was going through some notes over the weekend, just saw something by RBC Capital. It's not their own coverage, but it talks about the July semiconductor data from the industry itself, which was up 5.7% year over year and growth for 8 consecutive months. Now this was lower month over month because there was a lot of demand that came in, in the earlier part of the summer. So this is more of a just keep an eye on some semi stocks once we get this bottoming, or not the bottoming, but this once we get this decline done with, might be good places to go. The analyst points out stabilized NAND pricing going forward, improving DRAM pricing. Pardon me?
Sorry. Which stock are we talking about in the semi space?
The 5 most insulated ones that they highlighted is one of them is AMD, as you point out. The other one is ASML, which we've talked about many times. Cadence Design, NVIDIA, and Synopsys, which is SNPS. And cyclical exposure, they also add ADI, Applied Materials, and Micron Semiconductor. So they expect still more growth ahead for the year, although a little tapered from what we saw earlier in the past few months. But you know, it's just something to keep in mind.
Yeah,
Once
AMD is definitely on my list for entry once we start to see some subsiding price action in Nasdaq. And again, like I said, it will let the market show you when it's done selling. It could be done selling at 10% correction, could be at 12%, 15, 20%. The speed and the way we went up and how extended we are, and I kept pointing out nonstop 30% above the 200-day is very, very stretched. And all the froth that we were seeing with everyone piling into weekly call options on a daily basis, it's going to take some time to reverse all of that, to remove all the froth, to return to some more equilibrium, to normalize trading environment. And some people will get wiped out because of this crash, because they entered way too late, got too excited, and then that's what happens in these such cycles. So my point here is that at the end of all of this, there'll be great opportunities, and the names you actually mentioned are all really, really good ones. AMD would be on top of my list, been our favorite for a long time. ASMLs as well. No question about it, but this thing is also quite a stretch on its valuation, frankly speaking. So we need to keep an eye on this. NVIDIA is one of the greatest ones out there, no question about that as well. So we'll be watching all of it.
and it's not all that important to time it to the perfect bottom, because once things turn around, there will be, you know, ample opportunity to get at least part of the run. You don't have to, you know, bust your hump to get the exact bottom, basically.
You can think of AMD as simply as this, sell-offs like this will basically result in people forgetting the simple fact that AMD has a 2-year lead over Intel when it comes to 7-nanometer chip launch. And then after that comes 5-nanometer and then a 3-nanometer. So they have multi-year lead on top of Intel. So, corrective phases, the smart ones will know that these are presenting buying opportunities when they come to because nothing has changed essentially from what we learned just a month or 2 months ago when we had a massive disconnect where Intel falling off sharply and AMD rising sharply. And so, there's a few gaps in AMD that remains to be filled. For example, all the way down to $69 to $70 per share. This was after the last earnings report. And if we go in a really crazy continued sell-off mode in Nasdaq, then maybe all the way down to 62. Anywhere in the mid 60s, in my opinion, this would be one heck of an opportunity to get long advanced micro devices. So keep the big picture in mind and let the market come in. We do not know where it's going to end. 10, 15, 20%, 10 to 15% seems like normal, right? But just like parabolic moves and the pendulum can swing extreme to the upside, it can go to the other side as well until all the momentum indicators are so oversold. The NIMO, the NYSE, the NAM exposure index, the CBOE equity put over call ratio, the CNN fear and greed, and all of those, that maybe the pendulum will swing quite a bit to the extreme to the other side as well before we have that normalization trend. So keep an eye on this mid 60s in AMD if you get a chance. That's a great opportunity. All right, let's stop over here. Thank you, everybody for joining. We'll see you tomorrow.